What actually backs the US dollar? It's not gold. It hasn't been since 1971, so what gives a dollar bill its value? The truth is weirder than you think, and it all comes down to a self-fulfilling prophecy of power. A single piece of paper with ink printed on it is worth something because billions of people believe it's worth something. That belief is sustained by one of the most elegant and dangerous systems ever created, the petrodollar standard. Understanding what backs the US dollar requires understanding how value itself is constructed, maintained, and threatened in the modern world. For most of human history, currency was backed by something tangible. Gold, silver, copper, precious metals held intrinsic value because they were scarce, durable, and universally desired. A dollar bill was literally a claim on gold stored in a vault. If you brought a dollar to the government, you could exchange it for gold. This gold standard seemed to provide certainty. The value of money was anchored to something physical and immutable. But the system had a fatal flaw. It limited the money supply to the amount of gold a nation possessed. If you wanted to expand the economy, you needed more gold. If gold was scarce, economic growth was constrained. In the early 20th century, this constraint became increasingly problematic. The United States accumulated enormous quantities of gold but wanted to expand credit and money supply beyond what gold reserves allowed. In 1913, the Federal Reserve was created, establishing a central bank that could manage the money supply independently of gold holdings. But the U.S. remained technically on the gold standard. The dollar was still officially convertible to gold at a fixed price. This arrangement worked reasonably well for decades, but tensions built as the U.S. printed more dollars than its gold reserves could theoretically cover. By the 1960s, the system was becoming unsustainable. Other countries, particularly France under Charles de Gaulle, began demanding gold for their dollars, reducing U.S. gold reserves. The U.S. was fighting an expensive war in Vietnam and implementing ambitious social programs, all financed by printing dollars. As dollars accumulated in foreign central banks, confidence in the gold standard eroded. Everyone knew that if all holders of dollars suddenly demanded gold, the U.S. couldn't pay. The system relied on the expectation that people wouldn't demand gold. It was a collective fiction maintained by shared belief. In August 1971, President Richard Nixon ended the fiction. He announced that the U.S. would no longer convert dollars to gold. The gold standard was dead. Officially, the announcement was temporary. Nixon called it a Nixon shock, but it became permanent. The dollar was no longer backed by gold or any commodity. It became fiat currency, backed only by government decree and the collective belief that it held value. Economists and commentators predicted chaos. Without gold backing, they argued, the dollar would become worthless. Money printing would accelerate into hyperinflation. The value of the dollar would collapse. None of this happened. In fact, after an initial adjustment period, the dollar strengthened. The reason is crucial. Even without gold, the dollar had something more valuable than gold: the power of the U.S. military and the dominance of the U.S. economy. The U.S. could enforce the use of dollars through economic and military power. More importantly, the U.S. military protected global shipping lanes and commerce. Anyone conducting international trade needed dollars to do so safely. This gave the dollar a monopoly on international commerce. The real backing of the dollar is taxation. The U.S. government demands that taxes be paid in dollars. The IRS will not accept payment in gold, euros, or cryptocurrencies. It demands dollars. This creates demand for dollars. Every person and business in the U.S. needs dollars to pay taxes. The U.S. government also prints dollars and spends them, injecting trillions into the economy. This creates both demand and supply. The delicate balance between supply and demand determines the dollar's value. If the U.S. prints too many dollars without corresponding demand, inflation rises and the dollar weakens. If demand exceeds supply, the dollar strengthens. But taxation alone doesn't explain the dollar's global dominance. Many countries could theoretically demand that taxes be paid in their currency, but their currencies are far weaker than the dollar. The dollar's global power comes from what's called the petrodollar system. After the 1973 oil embargo, the U.S. made a crucial arrangement with Saudi Arabia. The Saudis would price oil exclusively in dollars, and the U.S. would guarantee military protection for the Saudi regime. This meant that every country that wanted to buy oil had to acquire dollars. Oil is essential to modern economies. Demand for oil created demand for dollars. This petrodollar arrangement spread. Oil producers worldwide, protected or influenced by the U.S., priced oil in dollars. International trade in other commodities, metals, agricultural products also became denominated in dollars. The dollar became the universal medium of international exchange. A Japanese company buying Brazilian coffee doesn't need reals. It can buy dollars and use dollars to purchase coffee. This eliminates transaction costs and creates enormous demand for dollars. The petrodollar system created a global reserve currency without any commodity backing it. The system works because everyone believes it works. This belief is fragile. It rests on several assumptions: that the U.S. will remain economically dominant, that the U.S. military will remain strong enough to enforce the system, that the U.S. won't print so many dollars that inflation spirals out of control, and that no alternative currency will emerge that offers advantages comparable to the dollar. If any of these assumptions breaks down, the system becomes vulnerable. Several challengers have attempted to undermine dollar dominance. In the 1990s, the euro was created as an alternative reserve currency. The euro never fully displaced the dollar, partly because the European Union was economically and politically fragmented compared to the unified U.S. In recent years, China and Russia have attempted to promote their currencies internationally, but neither the euro, the yuan, nor the ruble has been able to displace the dollar because they lack the combination of economic power, military strength, and political stability that the dollar possesses. The maintenance of the petrodollar system requires constant vigilance. When countries attempt to price oil in currencies other than dollars, the U.S. has historically responded aggressively. Iraq's Saddam Hussein announced plans to price oil in euros rather than dollars. Months later, the U.S. invaded. Libya's Muammar Gaddafi attempted to establish a gold-backed currency for African nations to use for oil trading. The U.S. and NATO intervened. Libya collapsed into civil war, and Gaddafi was killed. These weren't stated reasons for military intervention, but the timing is suggestive. The U.S. protects the petrodollar system with military force when necessary. The value of the dollar is therefore backed by a combination of factors: taxation demands within the U.S., oil pricing in dollars globally, U.S. economic dominance, U.S. military power, and the lack of viable alternatives. Remove any of these factors and the dollar becomes vulnerable. If the U.S. economy stagnates and other economies surge, confidence in dollar dominance erodes. If the U.S. military is weakened or perceived as less willing to enforce the system, countries will seek alternatives. If the U.S. prints excessively and inflation rises, the dollar weakens. If China's yuan becomes fully convertible and China's economy continues growing, the yuan could challenge the dollar's supremacy. The most immediate threat to dollar dominance is inflation. Unlike the gold standard, which constrained money printing, the fiat system allows unlimited printing. The U.S. has printed trillions of dollars in response to various crises. After 2008, quantitative easing injected enormous sums into the financial system. During the pandemic, stimulus spending reached unprecedented levels. This money printing creates inflation, which erodes the purchasing power of dollars. As inflation rises, the dollar weakens relative to other currencies and commodities. If inflation spirals out of control, confidence in the dollar could collapse, creating a death spiral where people rush to exchange dollars for alternatives, causing the dollar to collapse faster. Currently, the dollar remains dominant despite inflation concerns, but the system is increasingly fragile. Central banks worldwide are diversifying their reserves, holding more euros, yuan, and gold. This diversification is slow and gradual, but it represents loss of confidence in dollar hegemony. If a critical mass of central banks loses faith simultaneously, the dollar system could unravel. The deeper truth is that fiat currency value is pure abstraction. A dollar has value because the government says it has value and because everyone else believes it has value. This belief is self-reinforcing. The dollar is valuable because it's valuable. The system is elegant because it allows economies to grow without being constrained by physical commodity supplies. But it's also precarious because it rests entirely on belief and trust. If that belief breaks, the entire system collapses. The dollar is backed by U.S. power, economic, military, and political. It's backed by oil producers' willingness to accept dollars. It's backed by billions of transactions every day that assume the dollar will maintain its value. It's backed by governments holding dollars in reserves. But ultimately, the dollar is backed by nothing except the collective decision to treat it as having value. It's the world's most successful Ponzi scheme, sustainable as long as confidence persists, catastrophic if confidence breaks. Understanding this is understanding not just what backs the dollar, but how value itself is created and maintained in the modern world.